Okay, in this video I'm going to show you some examples of plotting supply and demand zones. I'm just going to go through my list here and we'll just plot a few of them so you can just kind of get a general idea what we're doing here. Like I said in the video, we look for areas where price moved away rapidly, so we obviously have that in this area back here in June. Price has not come back to that level yet, so I would drop a line right here and here and mark that as a supply zone. But we need to check first and go back in time and make sure that this is not part of another supply zone, because remember, we want fresh supply zones, zones that have not been touched before. So I'm going to go backwards here, and as you can see, this is actually part of another zone because we would plot this like this. Okay, here we have price actually coming down rapidly. We have a pause in that, so this is actually our zone right here. Okay, and as you see, that would have been an awesome trade had we have taken that trade in that zone. So what I do now is, because price moved away from that so rapidly, I still want to consider that as a zone, but what I'll do is I'll plot this same zone here. Okay, but I'm going to change the color of it. I'm going to change the color to cyan. Oops. Okay, so when price comes back to that area, that tells me that, hey, it was a pretty strong, nice move away from that area the last time price was in there, but it's not fresh. It's not the first time price came back to that area. Okay, we've also got another zone right here. And again, for the same reason we just plotted the first zone. We had price gap down and then pause and then head down again. Okay, so we would plot this as a zone, and what we would be looking for here is exactly what happened. We would be looking for a retrace up into that area and then a continuation of the downtrend. It didn't quite touch the zone, but the fact that we had a bearish candle here, I would very highly consider taking that trade, because what you're doing is you're taking a trade that's in the direction of the current trend. We're now in a downtrend. Actually, technically, we're not in that downtrend yet. We wouldn't be technically in that downtrend until about the second week in August, when it broke through there. So on these types of zones here, it didn't really move away from here fast when it retouched. So I would not keep that zone on there. More than likely, when price comes back up here, it will break through that zone. The reason I kept this blue one up here is because of how rapidly price dropped away from that zone. Okay, I don't really see any other zones on here that I would plot. Now, obviously, there's lots of areas here where you might be tempted to plot a supply zone. Here's one here, maybe even this one here that held, but these aren't big, strong moves. We're looking for big, strong moves, and actually this one I might have plotted, because something else you got to be careful of is when you have a big move in a stock, your chart's a little bit distorted. So what I normally look for a move of 10% in 5 days or 5% in 2 days. And so you can see that we have this here. Okay, so we actually have a zone right here. Okay, but price came up in this area right here didn't quite get to the zone, but it came down off of it, came up again, came down off of it. Now this one we would probably go ahead and plot because price broke through our bottom demand down here. So price came down and broke through, showing us that this area is a stronger area of supply. Okay, and as you can see, that one held right to the penny for a nice short trade there. This one down here, I would probably go ahead. I would go ahead and plot this as a demand zone. Okay, but we want to be just a little bit careful because it did not break through our previous supply up here. So when price comes back down to the zone, we're going to want to look for some type of confirmation, like a bullish candle or something to before we take that trade. Okay, I'm just going to go on to the next one here. Again, on this one, I don't see anything. Well, we got this area down here. Okay, where we would put a demand zone. Okay, we had a price move away from there of $9.70 up to $11, so that's 10%. Price also broke through previous supply at this level right here. So we would go ahead and plot this as a demand zone down here. A demand zone that has not been touched yet. If we go back, it's not really part of another demand zone. This other demand zone is sitting down in here. Okay. So we would take that as a fresh demand zone. Go on to the next one here. Okay, here we got price trading sideways for a few days, then accelerating up. So I would take that as a demand zone right there. Now a lot of that would depend on also our volume analysis. Just by looking at this, I can pretty much guess that we're going to have a volume peak inside of this. If not, I may adjust this zone down some, but I didn't want to get into that in this video. I just wanted to show you basically how we plot our supply and demand zones. Now, you can also see that this price accelerated through and busted through a previous supply zone. Okay, now that's not a supply zone necessarily that we would have plotted, and actually we would not have plotted that supply zone, but it's still a supply zone. And the fact that price broke through that adds credibility to the strength of this demand zone down here. So you're just basically looking for previous highs, pivot highs, when you're checking to see if it broke through previous supply. So that's important to make a note on too. And then what I'll do is I'll drop a line right up here somewhere around the top, and then I'll scroll back in time and see. We don't have a real strong supply zone there, but we do have one here. And again, it's not a fresh zone because it's actually part of this zone back here. Okay, so but it still made a nice move away from there. So I'm going to come back here. And bring this zone out. Okay, but again I'm going to change the color to cyan. Okay, so that tells me when it comes up there it's not a fresh zone. Okay, so what I'm going to be looking for in this, when price comes up to this zone, is I'm going to be looking for something, a confirmation like a doji candle, or maybe a, or not maybe a, but a bearish candle. Okay, so that's usually going to be like a shooting star. Okay, here's an example of both of those right here. Okay, there's our doji candle, and then there's our shooting star right next to it. If we get a pattern like that with the wick sticking up into this zone, then we're going to take a look at taking a short trade or buying a put when price comes up in there. Okay, so I can find some other examples here. Again, here we have a nice acceleration. I would draw my zone like this. And price didn't really move away from there, so I would still consider this a fresh zone. It didn't move away until it made that rapid move. Okay, so we're looking at a fresh demand zone down there. And again, we're going to come out here. See, again, we don't really have anything fresh in here. These are all, so I'm actually going to skip all of those. Here's something we should probably take a look at right now. When we have a gap down like this. Okay, when you have a gap down, these 2 points are going to provide support and or resistance. Okay, it's the point that it gapped down to, which was the start of the intraday trading. So it's where it opened up intraday, or when the market opened. And here's where a lot of people make a mistake. Okay, this is where we want to put the point it gapped down to, and it's very likely to break off of that point. Okay, I always change the weight on these to make them thicker so I know what they are. Okay, this top point at 26.17, that's where it gapped down from. It did not gap down from here. Okay, nor did it gap down from here. Okay, price was at this point. That's where it closed. When it opened the next morning, it gapped up down here. Now, where this is especially important is if there isn't any price action below that line. That makes that even stronger. But we more than likely are going to get a bounce off of this point right here too, as it comes up. But this 2302 is going to provide. I don't draw a zone there. I just leave it as a black line so that I know that it's the point that it gapped down to, and then when it gets up here I also know that that's a point that it gapped down from. And I will many times take trades off of those depending on how price is acting coming up into it. Okay. And we actually have the same thing right here. Now here we're gonna put it right there. Okay, we're gonna put a black line there, and we're gonna put a black line right here where it gapped down from. Okay, so those are going to be areas of interest to us. And again, you can see we have a nice break down here, but it's not fresh. Because here we got about 2 weeks later, it hit that zone, and that was actually part of another zone over here. So we want to stay away from those types, even though many times they hold. We're looking for our highest percentage trades. Okay, now this one I would take. I would take this as a supply zone, even though it appears like it's part of this other zone, but there's really no clear defined zone there. It's just, prices there, and it moved down away from it. So I would take this one, and then here's an example of where do you put the bottom line on the supply zone. Okay, we're not going to put it way down here. That's a $2 zone. We're not going to trade off of a $2 zone. So in situations like this, where we have too wide of a zone, I just arbitrarily draw it in there. I put it in there about where you would want your risk to be. So I probably risk 50 cents on this trade. So I just arbitrarily draw that line in there, and then I would draw my zone out like this. Now we also have this area down here that it did gap down from, because since this is a green candle, it gapped down from down here. Okay, so we're going to watch that as price comes back up to that area. Okay, and I would just continue that across to where we're at. I'm not going to waste time on this video. I'm going to move on to another one here. Okay, here we go again. Got an area where price actually gapped up from. Okay, so I'm going to check and make sure it's not part of another zone. And actually it is. Okay, so we had this demand zone right here. I'm sorry, supply zone. Okay, and when price came up to it, price broke right through it. It looked like it was starting to head back down, and then probably this was an earnings announcement or something, and price gapped up through that. So this is where, when something that was previously a supply zone gets busted through, it is now a demand zone. We also could possibly label this as a demand zone or a supply zone also. And by the way, this is something we try to stay away from when we have supply zones on top of supply zones. Okay, we normally don't take those trades because we don't know which one's really the strongest one. Here we got another one right here. Okay, so we're loading up with all these supply zones here. These are not the types of trades that I like to take. Okay, but I just want to show you this for yeah, as you can see, none of them even really held. But once this breaks through, then we take in this area is now demand. Okay, and I plot this on my chart, and I use a fill color of aqua. So just so when you see my charts, if you see aqua, that means it was a if it looks like a demand zone, or if it is a demand zone, obviously if it's below price level, then it's a supply zone that was busted through and is now a demand zone. Okay, we had the same thing here with this one. Okay, where that's now a demand zone, and it got busted through again there. So um, and by the way, once these are all violated and you're not using them anymore, just take them off the chart. Okay, so that one got violated. So this aqua demand zone is still fresh, so we want to leave that there. Okay, we have a doji candle here, gap up that broke through previous supply. Okay, we would plot demand right here. Okay, and these are high percentage trades because what you're looking at is you're trading in the direction of a new or you're trading in the direction of the current trend. Okay, so if price reverses down to this this yellow zone, this demand zone, and reverses off of that, well then we've got a confirmed. Actually, we don't need to confirm the uptrend because we're still in an uptrend. We never had a confirmed downtrend there. So the stock is in a long-term uptrend. Okay, so we're looking for a pullback into this yellow zone and then a continuation on. We would trade it at least to this $39 level. Now, we'll go back on this. See, that 39 level is actually part of another zone. So, but a trade from 34.50 to $35 up to 39 trading options, that's a sweet trade. So that's something we'd look at doing with a pullback to there. Okay, when you have price moving slowly out of these areas, we don't plot this. We don't plot a zone down here, okay? Even though it may be one, or like even this one here. See, none of these have price moving away from it rapidly. So even though this one actually held right here, I mean, you can see that it held, it would have worked. That's not the type of trades that we're looking for. We're looking for areas where price moved away drastically, showing us there was a huge imbalance of supply and demand. Okay, here we don't really have a drastic move away from there. See, on a 270, we want a 27-point move down from there in 5 days. I guess we got it. Okay, so we could take a look at plotting a zone right here. The initial impulse wave did not break previous supply or previous demand though, but it did. That leg did break the demand. So this would be one I would probably be looking for a little bit of confirmation when it came up there. I wouldn't be too quick to take that short trade. And we also need to obviously check and make sure it's not part of another zone. And it's not. Looks like it's an all-time high. So if price was to move up rapidly into this zone and get up there somewhere towards the top of this zone, then I would probably take that trade, take a short trade there. We don't really have anything to plot on the demand side. This area was a demand zone right here. Okay, but as you can see, it's already been hit. And price didn't really move away from it that rapidly the second time, so we're not plotting that as a zone anymore. Okay, let's go on to the next one here. Again, we have a gap up that that broke through previous supply. Our previous supply was right here. Here, I'll draw it with a rectangle so you can see it. Previous supply was right there. As you can see, it already retraced back down to that previous supply and it's taken back up off of there now. So this is actually an aqua zone because it was supply. Actually, we would do it like this. Show that once price broke through, that's now a demand zone. Okay, but we've also got demand down here. Okay, this is fresh demand. Okay, and here's a good example of we didn't really quite get 10%, but let's just say that this was a valid zone right here. Okay, now price came back up to it but didn't quite get there. Okay, I still count that. I count that as that zone being hit. And that's just being conservative about it. So when price comes back up to this 1802 level, I'm not looking to take a short trade. Okay, we got the same thing here. You know, we got our zone here, but it's already been hit. You know, so we're not going to touch that one. Got about a 10-point drop there. So this one we may plot, but we need to go back and look and make sure it's not part of another one. And it is not. We've also got one up here. So we can plot a zone here. Okay. This one is not a fresh zone, so we would plot it like this. And actually on this, I would probably plot this like this. And then I might, just for kicks, I might go ahead and put this in like this because it was such a huge move down. But that at least tells me that it's, when I see this, you know, way over here when price comes back up to there, then I see what I'm doing there. I know what I'm doing. That there was a non-fresh zone, but the last time price moved down, it really moved down. So I would watch that closely. The only problem that you'd have with this is you got this zone right below it, and once price breaks through there, that would become a demand zone. So that may not even be a trade that we would be looking at. I'm going to go on to another one here. Okay, again, the only real strong zone I see that's still valid on this chart. Seem to have a lot of gap ups lately here on a lot of these stocks. Okay, it's going to be this area here. Okay. Again, this area where it gapped up from. Okay, I'm gonna put a zone there. Looks like a lot of these stocks are reaching all-time highs. Same thing here. On this one, I would probably I'd probably want to put the bottom of my zone right there, top of my zone right there. That's a pretty big zone. Um, More than likely our zone is right here. Okay, which is a smaller zone. But I would still be really careful on this one as price comes back down to there, that the bottom of that zone isn't really down here. So I may maybe even plot it like this, just so I know. And so basically what I'm going to be looking for is I'm going to be looking for some confirmation when it comes down there, as opposed to just taking the trade right when it comes in the zone again. You know, here's another example of where we would have had a zone plotted like this. Well, that one actually made it. I didn't think it was going to make it to the zone, but when it comes that close, as you can see, that zone held and it bounced off of it. But um, when it gets real close to it, we still count that as being touched. Now this one actually did touch, so I guess that's not a good example. But okay, here we have, you know, another one where, you know, this was our zone right here. Okay, but price moved rapidly away from there. It broke through our previous supply. So that tells us when price comes back down here that we want to take that trade. Okay, but price moved away from there rapidly, broke supply again, so I'm going to put that one in there with blue. Because even though it was a nice move away from there, it's not a fresh zone. Okay, we had a nice move away from this area right here. Okay, more than 10%. Okay, but it's really, it's really part of this zone here. Actually, this is really kind of a wide zone, which we wouldn't draw it that wide, but we're looking at something like that. So again, this isn't you know, we may leave this in here. You know, I wouldn't even leave this one in here and turn it blue, because you got this one right below it and this one. I would just go on to another one. We've got 600 stocks that we're constantly going through looking for trading opportunities. So we don't want to take anything but the best possible trades, and that's where we don't have zones on top of zones. And we'll discuss that more in another video as to how we're looking at trades. This is just to kind of show you how you would draw the zones. Here we definitely have a supply zone up here that hasn't been touched yet. I'm going to go back and make sure that it's not part of another zone. It is not. Now again, we're not going to draw a supply zone like this. Okay, that would be insane. That would be an 8-point supply zone. So we're just going to use an arbitrary number here. And also what you can do sometimes on these, and I don't do it because it's not worth the time, but we can go back and look at at the hourly chart on this. Oops. Yeah, I'm not going to do it. But if you go back and look at the hourly chart, you may see, a small candle at the peak of this on the hourly chart, and then you would surround that. I don't waste my time with that because our risk on the trade is based on how close the price is to the top of a supply zone and top of a demand or bottom of a demand zone. That's how we determine our risk, because our stop is always going to be just slightly above a supply zone and slightly below a demand zone. So there's really no point in going in and trying to drill down and find where the bottom of this is. Again, here we have what looks like a nice demand zone right in here, but it's not. It's really part of this one, and it's actually all part of this one. Now, I wouldn't do that one, but I would do this one. And the reason is, this isn't a 10-point move in 10 days. I'm sorry, 10% move in 5 days, but it was a 10% move down in 5 days. So in other words, I'm not trying to confuse you here, but this is going to be a supply zone up here, right? Because we had that nice move down, more than 10% in 5 days, and actually more than 5% in 2 days. Okay, so we had a supply zone here. Even though price didn't move up out of here all that fast, I would still plot this one as a a demand zone, because price moved down into that and it abruptly stopped. Now it's not a real strong one, and it also didn't break through up here, but again, I would plot that there just to use it, not as an entry to a trade, okay, but as a target for a trade. And actually using it for a target, you're going to be a little more conservative. You're going to come up to this line right here. Okay, so, and what I mean by that is if I'm in a short trade up here for any reason, like let's say for example, we had this supply zone right here. Okay, it was valid because price made at least a 10% move or close to it anyway, but it also broke through previous supply, which was down here. Okay, this I'm sorry, previous demand, which was down here. You can see it did bounce off of it there, but it broke through before retracing back up. So we would take that as a supply zone. We're now in a confirmed downtrend after this broke through this demand zone down here, and so when price comes back up into this supply zone right here, we would take a short. Now we may only trade that down to this area down here, but let's say we stayed in that trade. I would be setting my stop, or not my stop, but my target, to say upwards, 46.75, maybe even $47, somewhere in there, and say, look, seems to be making it through here. I'm going to trade it down to there. But so this isn't a supply zone or a demand zone that I would necessarily take a trade off, even though it worked. And obviously it worked really well. But I would still plot those in there. And basically what you do is when price comes back down to that point, then you take a look, you go back and take a look, well, what formed that zone? Well, that was really a slow move up. So I wouldn't have taken that trade, especially with that bearish candle sitting right there. You got two bearish candles, two shooting stars. Even though that trade worked, I never would have taken it. But I definitely, if I was still in this short position from earlier, I would be looking to exit. Okay, again, we got, this is a fresh zone. I can see that without even sliding back on the chart. Okay. Okay, so a nice move up into that zone, we'd be looking at shorting or buying puts. Here's another example of a trade that failed. Okay, but if we look back, that was really part of this zone. Okay, one thing to note is you don't necessarily, even though you had it on this one, you had the 10% move. If it's a decent move, you want to disqualify this other zone as being a fresh zone. Okay, so you can see that what we actually had here, this one would have been like this. Okay, so we'd have been looking for a bearish candle with the wick in the zone. Well, when price moved up into that zone, we didn't have a bearish candle, we had a bullish candle. We had a hammer candle instead of a shooting star. We did get a shooting star the next day, but the wick of that shooting star is above the zone, so we would not be looking to go short there. The other thing I wanted to show you, and I didn't really see any examples of it as we were going along here, so I'm just going to kind of simulate that. Let's just say that we had a supply zone right here, okay? See all of this basing or sideways trading before the zone? When that happens, you don't want to take the trade in that zone, and that goes for demand zones and supply zones. We like to see price making a nice move into the zone, similar to this blue one that failed down here because it wasn't a fresh zone, but that type of a move. If this blue zone, this cyan zone right here was a fresh zone, we have a nice move, a nice 2-day move up into that zone. We would take a chance at buying puts there without any type of confirmation. Okay, when you see this basing, like you have, right below this zone, you want to be really careful about taking, and I won't take them. I won't take trades that come up into that supply zone. I look for something else, because when a stock's trading sideways like that for 4 or 5 days, and it actually did it for 4 or 5 days on the previous week, that's all basing. That's all a lot of trades happening at those price levels. Now, a lot of that also kind of depends on how much volume there is there, but those areas are likely going to provide support areas when the stock comes down, and we'll get into that in another video where we'll show you volume analysis. But you could very well have an area of high volume right in there, and an area of high volume right in there. And so that doesn't give us clear sailing to take a short trade, because we might come up into here, we might get a retrace, but come right down to this line, and then go back up to our next zone, or keep going. This is just a simulated zone. So I just want to make sure I showed you that, and that's both on a demand zone and a supply zone. Okay. Here's an example right here. Well, it's actually already down in the zone, but we're looking for basing before it hits the zone. I hope this helps, and again, email me, Kevin@zonetrades.com, with any questions. That's zone-trades.com.